What is it that has this trade maybe turning around?
Well, I think we look at it as this trade and we look at those 5 names. I think that's broke up. Like you said before, over the last 12 months, Facebook is down 8%. The S&P 500 is up 16%. So scratch that off. So FAANG then becomes ANG. Now you look at Netflix. Netflix had a 27% drop in July. Granted, it's recovered some of that. But really, this is a story about the 3 names. In full disclosure, I'm long Amazon, Apple, and Google. But all those have been long-term positions. They began as trades, but now they're kind of put into my long-term portfolio. And they're vastly different stories. You know, Apple and Google, I mean, they're the now. They're making money right now. They rule the world now. Amazon, we anticipate that happening, but still trades at a ridiculous high P&E compared to the others, a low P&E compared to what they've historically traded at, considering they are actually making money now. But I actually think when you break it into 3, those, and we can't really call them AG or GA because that's not as fun to say as FAANG, but those 3 now, it's not even really, it's just all individual stories now. And any one of those, I think, could break and correct and not have reverberations in the overmarket, which is what we've been talking about the whole time. Can we withstand a correction in those? I think now we certainly can because we've already had 2.
All right, so Jim, I mean, you're on almost every day on CNBC, certainly part of the Futures Now franchise that happens during the halftime report and, of course, on the online show as well. You talk about how traders approach some of these issues and how they develop strategies for it. So when you look from a trader's perspective at the price action, at the trading action, at the volumes of these names, what signals are you looking for that we could see a possible downturn in this trade, or conversely, a continuation of that bull run? What's key for you in that strategy development?
It seemed to me before that every time there was risk on, the market seems to act before it really digs into the real story. So every time a day seemed like it was risk on, money would flow to those 5 names. I think that's changed already. I don't think that the 3 stocks we mentioned are going to break anytime soon. At least it doesn't appear that way to me. But I think what's more important today is you look at the dollar. The dollar's been in a fairly high trading range for a long time, and that appears to be breaking down. Now, if the dollar trades below, let's say, 93.75 today, I think the knee-jerk reaction, and we're already seeing a little bit, is to buy the Dow. Now, it doesn't matter what the real story is in the big stocks of who actually exports and who actually benefits from a weaker dollar. The first knee-jerk reaction will be anyone that seems to be a big company that's global will be bought. And, of course, those 3 names fall into that as well, but I don't think it's going to be the same rush to risk on as it was before.
Jim, where do you think leadership in this market occurs over the next, say, 3-4 weeks into the midterm elections and into the end of the year?
Well, I don't love that leadership over the last couple of weeks has been staples, utilities, and healthcare. That, to me, smacks of defensiveness. But I think that was just kind of take a step back. FAANG is moving out of the picture. Let's see what happens next. So I like banks. I am long Bank of America and Wells, and I think that's a function of rates going higher. Banks like rates going higher. Banks would love a steeper yield curve. They're not getting it yet, but if they do at some point in time, that trade could accelerate. So that's what I'm looking at.